Yeah, how did you come to invest in a pets insurance company? Maybe we start with, do you have a dog?
It's a big market. It's one of the biggest mega trends in the world.
But do you have a dog now? Or?
I don't have a dog now because I travel too much. Do you have a dog?
Oh yeah, I have 3 dogs because
3 dogs.
I never travel, with the exception to NOAH, of course. No, but let's talk a little bit about DN Capital. Shazam, who has Shazam still on the phone? Nenad has been the investor behind Shazam, and I think you came to NOAH in 2009 already. You were.
It's a long time.
Yeah. Actually, there are like 50, 60
bit
people
of a dinosaur
here who came in 2009, which I think is wonderful. But anyway, talk quickly about DN, and yeah, we want to talk about the markets. And
Sure.
you've been a long-time market participant. And how long are you in the industry? You were at Advent, and then you set up your own business?
29 years.
29, that's 4 years longer.
I'm older than I look.
But he runs fast. So, Nenad, what is going on in the market? We had a lot of consumer internet companies here. They seem to not raise money anymore. I mean, Global Savings Group and many of these larger consumer internet companies are not raising money. Are the markets bad, or they don't need the money? And more the question is, what is hot now? What are you seeing as DN Capital? What business plans you have as an education company in Reno? You've got the new sectors quite well. Do you get less consumer internet and more of the smaller verticals?
I think it's a factor of what's happening in the market. We at DN we focus on software, fintech, consumer internet, and marketplaces, and obviously AI is being a factor in all 4 of those verticals. And so what's really working these days, SaaS, or a lot of our SaaS portfolio, especially the companies that are adapting to AI and able to incorporate AI in their processes. A company like Cognigy in Germany just raised 85 million euro round at a very good price. So things like this. NOAH, which is sort of hotels 2.0.
Yeah, NOAH. I forgot the name the whole day.
Missed it, huh?
No, they missed us, I think.
NOMA's growing like 200% a year, and it has like 85% occupancy rates.
And that's a 4 weeks or 6 months?
No, it's 4 days. It's like a hotel option. So for instance, if you come, we actually we haven't announced it yet. We're going to be coming in the UK soon, so you'll be able to stay there next time you come to NOAH.
Everyone can stay there.
Yeah, well, we don't have that many rooms actually. It's not that big.
In Numas and
well, we have a lot of rooms, but not in London. So each place has like 30, 40 rooms. It's not like a hotel like this.
Right. But in London,
no reception,
no
rooms
London.
like this. Yeah, absolutely.
Yeah. No, it's like efficient, right? It's all about efficiency. If you think about the next steps ahead and the exit markets, one theme which came across is that it takes longer.
So I've been doing this for a long time. 99, 2000, we had this gold rush. I was at Advent. I made partner there in 99. And we sold our entire portfolio in tech in 99 when I was there. And 2021 was a similar year. 2021 was for tech like a holy year. I mean, we did $19 billion worth of IPOs in 21. It was just spectacular. Paid back our third fund 4.6x. Exits come in waves, like buses, and unless you have something very unique. But I think we are in a period where you have to build companies and really work with the portfolio companies. Obviously, us, just like a lot of VCs, have companies that raise too much money at too high valuations. Growth has stopped, and so we're working closely with these companies to get them back. But Shazam had that problem before, AutoOne had that problem before, but they got through it and had great exits. So it's a matter of now working very closely with your companies to make sure that they can survive with the money around the table, or at least get to profitability. And I think you mentioned consumer companies and which ones are doing well, which ones are not. The ones that have great unit economics are doing fine, but the ones that have negative CAC of less than 1x LTV, those guys are might have got funded in 21 or 19 when people saw the growth was crazy, but then when people realize if you do the analysis, that actually they were losing money every time they sold.
Maybe the growth came from the previous investor who put a lot of money in and they bought.
Well, there were a lot of investors who are not very active today who just kept telling the CEO, grow, and not focus on unit economics. And unit economics are critical. So that's something we've always done. I remember a couple deals we looked at in Berlin where we actually, because I come from Advent, we have a pretty rigorous due diligence background. And we're like, this company doesn't make money. Every time they sell their product, it loses money. And then 3 months later, we saw one of our competitors put 20 million in, and 12 months later it was bust. Because the companies that don't have good unit economics are not going to survive in this market.
Is the US market different to Europe? I remember there was always this valuation gap, and I don't speak to companies a lot about going public, but to the ones who speak to me, they want to go public in the US. Is the European market still?
That's a real tricky question. I mean, if you look at a lot of European companies that went public, and I won't mention names, but a lot of them are trading at 1 times cash.
Like HelloFresh? Or?
I'm not going to say, but it's been tough. The European market's been very tough unless the companies are very big, like Adyen or Spotify. Those are big enough that they're getting enough attention from international investors. But if it's small cap, it's very hard.
And do you recommend European founders to move to America, like Israeli startups?
No, not at all. So we have a very strong thesis, which is we find great European companies, and then we help them get into the U.S. market. You can tell from my accent, I grew up in the U.S. My business partner, Steve, is American, but everyone else on the team is also behind that strategy. And we've done it again and again. We'll come into a company, help them expand in their local country, and then help them get into the U.S. And a lot of times our co-investors in the next rounds are U.S. funds.
Okay.
So for instance, Cognigy has Insight, GetAccept has Bessemer, Torlane has Sequoia, et cetera, et cetera.
Nice. So that's your cookie cutter.
That's our cookie cutter. That's what it's a big part of our strategy.
You want to cut another cookies in the next 30 years, or?
I'm still going to cut a few cookies. I won't be cutting cookies forever, but at least 2 more funds.
What was your biggest exit so far?
You know it, Auto1. So we invested in Auto1 at 20 million pre-money valuation. We took it public at 10 billion. And basically we made 144x our first check, and I think 24x all of our money, and then 3x the fund.
Is that where you learned about the unit economics?
Actually, it's a good point. On Auto1, a lot of people turned it down. A lot of people turned out Auto1. They said, there's just a bunch of used car salesmen, which is what they were. But if you actually went into the detail of the unit economics of the branches, you saw that the branches were profitable. And then it was a matter of putting more gas on the fire, which is exactly what we did. So we brought Andren in from Piton first. In fact, Andren was dying to get in the deal. There was no space, but I let him have 200K of the Series A.
So nice of you.
Yeah, but it was the most strategic 200K, because then he came in with one of his LPs and did an interim Series A, which really helped the company and gave him also some debt. And then Tom from DST came in, who was a fantastic investor, one of the best in the market. And
what happened to Auto1? Where's the market cap now?
So Auto1, actually, if anyone owns the stock, it's been up like 50% in the last month or two. And it's doing well. It has enough cash to get to profitability. It's a leader in the market. You have a fantastic CEO, Christian. So I think, it's a long-term game, but, Carvana is back up to like 15 billion.
Oh, really?
Yeah. So Carvana got hit hard too. What? 22? Okay, even better. So I think Auto1, I own the stock personally, and obviously no public information here. I'm not on the board, but I love the company.
But it's interesting, right? In a market downturn, everything gets cut.
Yeah.
And then you can actually really make money by looking at what did get cut for the wrong reason.
Wow, this is, and also like you look at the venture fundraising market, it's down to probably the worst it's been in 20 years. This is exactly the time you want to invest. It's not 2021 when the P ratios on the markets are 28. Now is the time to invest, guys.
So have you invested more in 24 year to date versus 21 year to date?
We are gearing, no. Because like everyone else, we were drinking the Kool-Aid.
Yeah.
Luckily, we didn't drink too much Kool-Aid. But, also there were more deal opportunities. I think, last year was pretty flat in terms of just the quality of things. I think now, 2024 is much more upbeat than last year. I think most people in the room would agree, no?
Yeah, no, we're definitely going back up. I can, as a conference organizer, confirm that. I've met over 20 investors last week here in London, and everyone is. But it's more focused on, bootstrap, suddenly, profitability matters, and new deals, they have to be coming with this feature. It's the first NOAH ever where we didn't have one dropout, and we finish the day on the 2nd at 18:15. Thank you so much for being with us on the first NOAH Revival London. By the way, a lot of people ask, hey, I'm going to Zurich. Hey, you didn't get the message. There's only NOAH London now, right?
Right.
So
You're not going to do Berlin again?
no.
No? No Zurich extra one?
No, we're
little
launching lots
NOAH?
of digital projects
Okay.
or products. Some of them you already saw. No, we are doing NOAH quarterly update calls, NOAH deals, and NOAH dinners.
Actually, I quite like NOAH Zurich. It was nice. Good excuse to go to Zurich, but anyway.
Or you can still come and visit
Still
me.
come visit you.
Okay. Well, thank you very much, everyone, for being with us. Give me a hug. Thank you.